So it's not your money because you don't actually own your money. The moment you put it in the bank, what you've become is in fact a debtor to the bank, or a creditor to the bank. So you've lent them money and you get some legal redress that if you've got less than 100,000 euros, pounds, whatever the currency is, generally that's protected by the government, that if the bank goes bust, then you get your money back. But anything beyond that, you don't get anything. 99% of people listening to this will not be able to invest in it, apart from buying some of those big public companies, because they're not accredited investors, they're not allowed, they don't get to see it, it's an insider, all of this.
As society transitions into a digital era, blockchain technology is emerging as a transformative force, challenging traditional systems and introducing new paradigms of value. Its ability to offer secure, accessible, and continually evolving solutions positions it as a cornerstone of technological advancement. Blockchain redefines how economies function, assets are managed, and everyday interactions occur, paving the way for a decentralized and trustless future. Real Vision co-founder and CEO Raoul highlights how blockchain and cryptocurrencies address long-standing issues of trust, verification, and value in financial and digital systems. Unlike traditional banking and assets like gold, which rely on centralized trust and are vulnerable to systemic risks, blockchain provides a transparent, decentralized framework. This eliminates intermediaries and ensures secure ownership, offering a superior alternative to legacy systems. PAL further underscores blockchain's democratizing impact, enabling broader access to investment opportunities in technological disruption. Unlike traditional avenues like AI, which often require insider knowledge or regulatory clearance, blockchain opens doors to inclusive participation. By empowering individuals to engage in this transformative shift, blockchain is reshaping the future of innovation and investment.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I'd love to see everyone there. Peace out.
Crypto is just a technology. You know, it's a lot of things to many people. It's just a database that's better than databases in the past. So right now, your database might be in your spreadsheet, and let's say you and I have a bet. You write it down there, and we get a third person to say, yeah, that was the bet they had, and this is what's happened. Okay, that is how databases, that's banks, that's pretty much everything we do in society is in this ledger system. In the old world, we both had our gold.
Yeah.
And we'd stick it in our safe or bury it in the ground. That gold was your gold. This was my gold, and I might try and fight you for it. That's what pirates did. Okay. And then we invent banks. And banks, we put it in there, and they give you a note to say, Stephen, you've got one of those coins. Raoul, you've got one of those coins.
Okay, so we've both got a note now saying that.
Yeah. And now we trust this bank to give us our coins when we want them, because they're our coins.
Mm-hmm.
Okay, that makes sense. Safe as a bank, as people would say. The issue is in this world of smoke and mirrors, what's known as fractional reserve banking, they have taken those coins and given them to somebody else.
They've given my coins to someone else?
Yeah, they've lent it for money. So now that coin is not in there. But they've been given the money. So usually when you're just, if everybody pulls all the money out, there's not enough money. It's called a bank run. We've seen those recently, but that's a classic thing. So it's not your money because you don't actually own your money. The moment you put it in the bank, what you've become is in fact a debtor to the bank, or a creditor to the bank. So you've lent them money and you get some legal redress that if you've got less than 100,000 euros, pounds, whatever the currency is, generally that's protected by the government, that if the bank goes bust, then you get your money back. But anything beyond that, you don't get anything. Because 2008 proved another thing, is that nobody owns anything. So the whole system itself is leveraged. So, for example, back in that time, the average US government bond, which is the safest thing in the world, was leveraged up to 30 times. That's known as the Byzantine generals problem. It's actually a philosophical, mathematical problem that has been unsolvable until Bitcoin came along. And what it is we are generals in a war. You are way away from me. We can't communicate with each other, but I need to send somebody to tell you something. There is no way of making sure that that person tells you exactly what I've told them, and no way of you approving it. And that's what a three-party system does. I may go to a notary, but how do you know I haven't bribed the notary to lie? I see that all the time. We see it with accounting firms and audits. We see this in everything. There's always one of these trusted parties that is not trusted. The bank, classical trusted counterparty that suddenly may not be trusted. We saw it with Silicon Valley Bank recently in the US.
Mm-hmm.
So what blockchain did really cleverly was said, okay, well, the way of solving this is to get thousands, tens of thousands, hundreds of thousands, millions of people to confirm it. So this blockchain, so this, let's say, is a Bitcoin.
Mm-hmm.
This slot on the blockchain is confirmed by every other part of the blockchain, which is all the computers that solve this mathematical problem. We don't need to worry about that. But what it is tens of thousands of people reporting on all of the activity. So if I transfer this ownership to you, it will know that you are the owner. You can either hold it yourself, like the gold coin, as a bearer asset, or you can ask somebody to custody it for you, but still your name.
Raoul points to the 2008 financial crisis as a clear example of systemic fragility, highlighting how blockchain offers a decentralized solution to such vulnerabilities. By enabling thousands of independent verifiers to validate transactions, blockchain removes reliance on intermediaries. Using Bitcoin as an example, Pal explains that blockchain ensures secure ownership transfers, allowing users to hold or entrust assets with proof of ownership. Pal also emphasizes blockchain's potential beyond cryptocurrency, particularly through non-fungible tokens. Initially popularized in digital art, NFTs have evolved to serve practical purposes, such as storing concert tickets on-chain to create digital scarcity and preserve value. This expansion showcases blockchain's versatility in redefining how assets are managed and exchanged. Further, Pal underscores Bitcoin's limited supply and decentralized reward system as critical components of a global investment infrastructure. He contrasts this accessibility with restricted AI investment opportunities, highlighting blockchain's inclusive nature and fractionalized participation. Ethereum's network expansion, for example, exemplifies how blockchain fosters widespread involvement in technological advancements, offering new possibilities for users and investors alike.
Now, what we can start doing is using this very powerful chain and putting other stuff on it. The first random thing that came on it was actually art, because it's valuable, called NFTs, non-fungible tokens. They're single pieces of art that were stored there, and we can have ownership. But that's really experimentation. Really, your Taylor Swift concert tickets can be on-chain. Why would you do that? Because now this has solved another big thing that didn't exist. We talked about before, in a digital world, everything goes to zero in value. So Raoul, what's the point of this? This is just like cloud storage, just goes to zero in cost. No, because what we've created is digital scarcity. You can only create a certain amount, and we can make that one asset be that one asset. And so therefore, it can't be replicated at all. So now in this digital world where every day is more digital than the next, we've created scarcity. And scarcity is what gives value. It's what humans assign value to.
And that means that
scarcity of knowledge means that knowledge was valuable. Lawyers, because not that many people come out of law school. That then now with AI, not valuable. What we've got here is this very clever thing that everybody in this blockchain gets rewarded for the role that they play.
In maintaining the blockchain.
In maintaining the blockchain. And because these things are scarce, and let's say Bitcoin being the most classic example, there's only 21 million that will ever exist. You've created this scarce asset that is a reward system. So the people who mine the Bitcoin, they use the electricity to solve the algorithm to get the Bitcoins to make sure there's only 21 million. Well, they get rewarded. The people who verify the chain get rewarded. And then we can buy the asset, which is actually us investing in the future use cases of this thing. Are people going to use it for storing wealth or building stuff? So now you get this global infrastructure layer of which people can invest. Now, let's go back to the example of AI. AI, 99% of people listening to this will not be able to invest in it, apart from buying some of those big public companies, because they're not accredited investors, they're not allowed, they don't get to see it, it's an insider, all of this stuff. This is the inverse. It is fractionalizable. So a Bitcoin, you don't have to buy one. at 60 whatever thousand it is today, you can buy a fraction. You buy an Ethereum token today. If Ethereum ends up becoming bigger and more uses, your token value goes up. It's as simple as that. So you get to participate in an entire technological revolution really simply from your mobile phone. And you don't need anybody to approve it or do anything. Yes, there's regulation stuff, but simple stuff like that is pretty straightforward for almost everybody in the world. So therefore, we talked about how do you invest in your disruption and the future of technology. Okay, here's one where you can really do it, and it's easy to do.
Bitcoin has been trading above its breakout level of $73,740 for 2 days, signaling strong bullish momentum as holders maintain their positions. This breakout represents a significant threshold, with a target of $93,500 based on the previous trading range between $54,000 and $73,740. However, resistance is likely as bearish traders attempt to pull prices back into the established range. A successful bearish push could bring the BTC-USDT pair down to the 20-day exponential moving average at $72,900. A rebound at this level would suggest bullish momentum remains intact, while a break below the EMA might trigger a deeper decline toward the 50-day simple moving average at $66,226. Ethereum has also shown notable strength, breaking out above its symmetrical triangle pattern and surpassing the $2,850 level. This move suggests a potential trend shift, attracting increased buying interest. However, like Bitcoin, Ethereum faces potential resistance as bearish traders may try to push prices back into the triangle. If bulls defend this level, it could indicate strong demand on dips, potentially driving ETH-USDT toward its downtrend line. A failure to sustain the breakout, however, might lead to declines toward the moving averages or the triangle's support line. Both Bitcoin and Ethereum are at critical junctures, with upcoming price movements hinging on key support levels and the intensity of bearish resistance. These dynamics will likely shape short-term trends for both cryptocurrencies. As blockchain technology continues to redefine value, scarcity, and decentralization, do you believe digital assets, NFTs, and decentralized financial systems can democratize access and reshape the global economy? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.